Yep, it's official now. Tech Mahindra is the winner for Satyam, and so we believe. So the stock is up 15% now. So at the end of a 3-month process, Tech Mahindra takes the honors. It was a bit of a dark horse. It looked like Cognizant might bid more aggressively, or WL Ross may. It looked like, given his financial muscle or superior financial muscle, L&T might do it. But Tech Mahindra has bid most aggressively at 58 rupees among the three and has won Satyam Computers. That's what we believe. If this is true, Mithali, what will also happen is that Satyam will probably not hold on at 54 rupees. That will probably come off now because at 58 rupees, if you work the math, then if the acceptance ratio is indeed 1:3, 1 in 3, then the stock should not be at 54 rupees. It should actually come down a bit. And Tech Mahindra too has reacted quite a bit. It was up 24%, now is up 12-13%. So that too has seen some profit taking, if that, or reaction. So Tech Mahindra wins Satyam, pays 58 rupees per share. These are the salient points of the end game of the drama, or the final act of the drama. Tech Mahindra wins Satyam at 58 rupees per share, has to pay out depending on what the open offer acceptance is, and that is a crucial point. How many people will tender in the open offer, and whether Tech Mahindra will get its entire 20% in the open offer. It will have to fork out between roughly 3,000 crores to 4,000 crores, depending on what the acceptance ratio is for a 51% stake. That values Satyam between 6 and 8,000 crores for the combined entity, again depending on what the eventual acceptance ratio would be and whether Tech Mahindra does end up getting 20% in the open offer. So done deal. Satyam Computers now is trading at 51 rupees.
Just up 7% actually, Udin, as you were saying. So it's ratcheted down the trading interest quite a bit from that double-digit percentage gain. It will probably settle down again depending on the acceptance ratio and the band it's traded in for a long time.
Yeah, and I think you've got to ask yourself, and people will have to ask themselves whether they tender. I mean, if they own the stock at 51, are they better off selling in the market right now? Should they hold on and tender at 58 rupees to Tech Mahindra? There are two considerations there. One, of course, as we've been saying, what is the residual value post-open offer of Satyam Computers given that Tech Mahindra is the winner? Do you believe that Tech Mahindra can turn the company around and do a great job of building Satyam from here? If the answer to that is yes, then at current price, do you hold on to Satyam Computers and not tender at 58 rupees to Tech Mahindra? Or do you believe that your best chance of exit is now? So you start milking away now and also tender in the open offer some portion that you are willing to submit at 58 rupees. So that is pretty much what it boils down to. But purely on the arbitrage, the stock might settle somewhere in the 50 rupee mark, given that the upside is only about 18%. Or 16% from here between 50 and 58. So 15-16% arbitrage on a 1:3 acceptance ratio seems like a reasonable price to settle down, but it depends on what you believe the eventual end game for Tech Mahindra's leadership of Satyam will be. That would be the outcome.
Yeah, that's where it stands right now. Of course, over the next couple of months, there will be the other parallels to draw on whether or not Satyam will be run as a subsidiary, whether it will be merged into Tech Mahindra, how that process will work. But for now, this 3-month-long drama has closed up, and not too badly at the end of the day, I think. Just under 60 rupees per share for a Satyam shareholder, especially for some of the institutional guys who held out.
It's a good point, Mithali. I mean, we've been just talking about Tech Mahindra, L&T and Satyam, but what about the board? I think the board needs to be commended for pulling it off, Mithali, because, I mean, they took 3 months, and that's not an inordinately long amount of time to pull this off. They got it out at a reasonably good price. I think to fetch between 6 and 8,000 crores of imputed market value for this asset, given that the revenues have been whittled down to about 7,000 crores, I think is a fair value in the current circumstances to get. So I think what looked like a tricky kind of game over the last couple of weeks for the board, they have managed to pull it out, and I think 58 is not a bad outcome. It could have gone at 40 rupees quite easily. I thought, frankly, it would go at a much lower price than the price which Tech Mahindra paid out. But I think the board needs to be commended for doing this. So from day one, the involvement of the government, then the board taking over, whatever disclosures they managed to get, because it was not easy to get all the disclosures out, and finally to hand it over to a reasonably sized technology company, not even a private equity or a financial investor, which may not have been in the best interests of Satyam employees and the Satyam business as a whole, I think has been a reasonable outcome for the board. So I think Deepak Parekh and Kiran Kani can hold their heads high for what has been achieved today in the Satyam endgame. 58 rupees is not a bad price. Tech Mahindra is not a bad suitor for the board at least. They have at least given this a reasonable shot, and that you should commend the board on, that their first priority, the board's first priority was that Satyam as a brand and a business should not sink. All the employees should not lose their jobs. This business as a going concern or as an entity should not die down. And I think in choosing or in getting Tech Mahindra in as a partner, they've given all of it a reasonable shot. At 58, they're giving a reasonable exit to the shareholder today. Not that that was top priority for them. They're giving the business a reasonable shot of keeping afloat and building on this $1.5 billion revenue base. And they probably will also give a small amount of comfort to the clients of Satyam as well, that this is a company which has a good partnership with BT and runs a reasonably efficient technology company as well. And therefore they understand the domain and the terrain and can turn around Satyam. So both to clients and for employees, I think the Satyam board might have ended up giving some degree of comfort, and for that I think they deserve probably a pat on the back. So from a board perspective, I think the outcome should not be faulted.
Absolutely. I don't know if either of us saw this getting resolved in 3 months' time. 58 rupees per share is not what the stock indicated over the past many turbulent months that it's had. And like you said, I mean, you can split hairs about who has greater focus on the vertical that Satyam works in, but otherwise it's an IT company that they're taking on. This, by the way, is the stock reaction. Tech Mahindra is up 13% today in trade. They have won the bid for Satyam at 58 rupees per share. L&T has reacted positively as well because they're out. They had apparently bid at just under 50 rupees per share. We have no word really on what Cognizant, Ross and that combination did in terms of a bid price, but the winner at this point is Tech Mahindra. Almost comparable market caps taking each other on now, or one taking the other one on now. So Tech Mahindra is still seeing extremely big volumes in trade today.